Welcome, Ben, to the Dario Mambo Show.
Yeah.
Thank you for being here.
Yeah,
It's a
of course.
pleasure having you, man.
Yeah, of course. Second
So,
time around.
Second time around. This time it's going to be interesting. I got a series of questions that I focus on to get the best content out of you today. All right. So,
Okay.
but before we get started, tell me who you are and what you do.
My name is Benjamin McGuire. I'm a mortgage broker here in San Antonio, and I help people finance homes. That's
Nice.
what I do.
Nice. So you work in the real estate industry as a mortgage specialist.
In the industry as a mortgage specialist, yes.
Nice. All right. So right off the back, question number one for you is, can you share a story where a first-time homebuyer felt misguided or had a negative experience?
I have a handful, but I'll tell you one. This one was special because it was the first closing I ever went to. Also, that they got a little sentimental, right?
Yeah.
So I get this referral because my business is organically based, right? I don't pay
Yeah.
for leads or anything. And they called me up and they said, "Hey, look, I've been talking to some guys at this mortgage company here in town. Can't remember the name.
Nice.
But she said they said I don't qualify. Like I only have, 7,000 saved up
Mhm.
and I don't know, right?" And I'm like, "Okay, well, I'm not someone to turn down
Yeah. Work.
anyway." Yeah, I'm like, "Hey, well,
they want to help. You're gonna get help.
let's take a look." This was like early 2022. So, yeah, I,
Mhm.
took that phone call. It
Yeah.
was like 10 o'clock at night, went through the file. She was very eger. She was like, "I need to make this happen."
Mhm.
So she sent me everything right then and there when I asked for it, which is our like the best clients.
Yeah.
And essentially I just said, "Well, based off what I'm looking at, like I can approve you, right?"
Yeah, we can get.
They told her, I think like 170 max.
Yeah.
I got her up to like 325 probably.
Wow.
Yeah, 325. Closed her in like the 255 range.
So you felt that she was misguided from her first loan officer that she was working with?
I think so. The thing about it is I did a down payment assistance program for her.
Yeah.
So with down payment assistance program, the stigma around it on the lending side is we take a pay cut. And for me, it's
Yeah.
like, well, do I want to take a pay cut or do I want to get no pay?
Right.
Right. Like, and at the end of the day too, it's good business practice to help somebody
Right.
to the fullest, regardless
Right.
of how much you're going to get
I
paid.
think that's the principle you led by. It's like
Yeah.
not necessarily the compensation, but to help her out.
Yeah,
And that's probably why it made it special for you, right?
it did. And, we get to closing. I made it special. I think it was like my mom's like second closing. It was
Yeah.
my mom who referred her to
Yeah,
me.
nice.
She's an agent. But we went to a closing. It was the first closing I ever sat in where like the lady starts crying,
Yeah.
because she didn't think it was
Wow.
possible.
Nice.
And then one of her family friends come and, now they're crying and everybody's crying in a title company. And I'm like, all right.
Is this what I'm supposed to be expecting?
Yeah.
Every closing. 'Cause that was your first closing, right? You said?
No, it was that was probably like my 30th closing.
Oh,
and,
I
like
see.
the whole
But it made a big impact in you.
it made a big impact. I helped,
Mm.
in my first year of mortgages, I only helped like 21 families.
Mm.
And it was all like, I mean, you know where we come from.
Yeah.
With Carl's office, it was all just like pick up the phone and dial.
Yeah.
And so some of
Yeah.
it was special, some of it
Yeah.
was more just like routine. Like,
Yeah. Let's
you
talk
know.
about that because you and I have experience working together in this
Yeah.
brokerage under Carl Bishop, who's a broker.
Mhm.
What are some takeaways that you found in that type of environment? Because it was a boutique brokerage.
Yeah.
What do you think what are some principles that you still use to today that you learned there, and why was it important?
being on time,
Being on time,
yeah.
holding yourself accountable.
Holding myself accountable. I think I've been an individual that's been able to hold myself accountable to
Yeah.
a certain extent.
Yeah.
But I think being there helped me like kind of put more on myself to like, hey, like this is unacceptable
Yeah.
type of stuff.
Taking it serious.
And just being like all around a professional, if I'm being honest.
Yeah.
A lot of people get into the business and it's pretty wild with some of the things they say or how
Yeah.
they present themselves.
Yeah.
I'm no saint, for a while I kind of went down a path of rebellion in the
Yeah.
sense of like I'm posting the marketing the way I want to post it.
Yeah.
I'm gonna dress how I want to dress.
Yeah.
I'm going to the office in sweats and long sleeves and
Yeah.
hats and beard scruff,
Yeah.
and so getting like a reality check and getting back to that, like, hey, we're professionals.
Yeah.
Because I mean, if you remember, I met you before I was even licensed.
Yeah.
You were interviewing with Carl,
Right.
And
Yeah.
I went up to you and I said, I'm gonna be a mortgage lender.
Yeah.
And you're like, oh, okay, yeah, cool.
What's that?
Yeah, all right, awesome. But at that time, you know, Carl demanded that we like dress professional.
Yeah.
You know, either have a coat on you, or if you don't have a coat, you don't have any suits, then you need to be presentable. You can't, you know, any tattoos, cover them up, stuff like that. So that's what I took away from there, just being a
so you kind of come full circle.
Yeah, in a way.
Nice. Other questions that we get to, or regarding technology, there has been a rapid evolution of technology in the mortgage industry, which led to the alienation of certain demographics. What's your take on that?
Man, with technology progressing, of course, you still have like the older generation that may be buying houses, downsizing, stuff like that. So when you ask them to, can you complete the application online? It's like, what? You know, I still have dial-up.
Right.
You know what I mean?
Can I fax that to you?
Yeah. Do you have a fax? And I'm like, I don't even. If I'm being honest, I don't know how to use a fax.
Yeah.
I can scan and print documents and stuff like that. I can scan
on my phone.
But you asked me to use a fax, I'm gonna give you the number. I just don't know how to use it.
Right.
I think with the rapid progression of technology, it's gonna put a strain on the older generation. But at the end of the day, too, the bitter part of it is like they're getting older. You know what I mean? And so the next generation that's going to be in their shoes are accustomed to the internet already. And so
you're having to serve people in different demographics. Different competencies in the technology that's kind of rolling around, and the technology is kind of rolling out quick.
In a way, right. Sometimes, I could tell right off the bat when I do a consultation over the phone, what it's gonna be like. If I'm talking to someone in their 20s, 30s, 40s,
no problem.
I could direct them online, right? Here, fill out this application. It'll come directly to me. I'll get everything taken care of after that. If I can tell that they're a little bit older and, they're like, maybe I'm calling their house phone still. Then I'll do the application over the phone. I can tell them, hey, I could take your application over the phone. It's just adjusting to who your audience is at the moment.
I see. So as an experienced loan officer, you kind of know how to work around the different demographics.
Yeah. I get a feel for it off the bat.
So AI is coming in play into our industry. In fact, to a lot of our lives in many ways. What are you most scared about in your industry with AI?
Taking my job? No. No. I went to a conference back in late August, and they were talking about the AI that they have and how it's not necessarily meant to take over your job, but it's necessarily to help you like do your job better, I guess.
So
in a
it
sense,
should be a resource or a tool.
Both,
not a crutch.
Yeah, not a crutch, but both. This AI source that also too, it's not available to everybody. It's only available for a certain company. Like I don't have access to it. Because I went to this seminar. It's a mindset seminar, and they had sponsors. One of the sponsors was Angel AI. So with Angel AI, the owner and developer is basically telling us, hey, you give me a full 1003, I'll put it in Angel AI, and they'll tell me exactly how I could get it approved, and how fast I could close it. In other words, the AI system is saying, do XYZ and you will close this. Don't do XYZ and you'll close it, but it'll be a struggle. Or if you completely go off path, you're not going to close this loan.
And it takes into account the applicants' information.
Yeah.
Wow. So you don't have to. So that it almost puts like a world of experience in the palm of your hand.
To an extent, and it had. I think he told us it had like 100% success rate.
Wow.
I mean, I would say 99.9%, but because for him, he was also telling us, and if Angel AI messes up, I'll fund the loan myself.
Yeah. Wow.
So it's like, okay, this guy's
he's
putting some money up if this fails.
Yeah.
So no, that was pretty neat. But I think just as technology progresses, you just have to adjust to who you're talking to.
What are you most excited about on that topic with AI in your industry?
I don't know. I think I would just be more excited, like if we run into a complex situation that maybe an underwriter can't even give us a clear answer on, maybe that can. But even at that, it would be one of those things where it's it's kind of risky. You know what I mean?
Yeah.
So I don't know how I feel about it yet.
Not
But
yet,
I'm not opposed to it though. I'm not opposed to
You're
it.
open to see what it comes out to be.
Yeah,
Nice.
open to see that.
So you're a mortgage specialist, right? You help people get approved and qualify for homes.
Mm-hmm.
What aspects of your job as a loan officer do you think are ethically challenging?
I'm a very ethical person when it comes
Yeah.
to work.
Nice.
I won't last in prison, and I don't want to pay a fine.
So what are your principles? What do you hold on to? Like,
Just service first. You know, giving the best service that I can to an individual, and just making sure that we're going by the guidelines. You know what I mean? If it's not by the guidelines, and we're like,
who sets those guidelines?
well, you know, we have a set of FHA conventional guidelines, Freddie Mac, Fannie Mae, and then we also have there could be overlays with the banks that we use as well. So just if we know the
I see.
overlays, sometimes it's not as far as like a guideline. It's just like, hey, maybe underwriting might take 3
Yeah.
days instead of 1.
Yeah.
I haven't ran into that yet, but just being by the guidelines, honestly. Like if the guideline says, you know, hey, to be a cosigner on an FHA loan, to do 3.5% down, you have to be related to them. And, you know, you've told me they're not related.
Yeah.
And then I'm like, hey, well, it's going to be 25% down now.
Yeah.
And it's like, oh, no, they're related. And it's like, hey, like, don't fool me, man.
Yeah.
You know,
Yeah.
or just, you know, little things like that, really.
So the challenging part is that if someone doesn't have strong principle like you do, someone doesn't have those strong principles, they can just sweep that under the rug and just pretend they didn't hear it,
Yeah.
which can be the ethically challenging part.
That could be, yeah, because, I mean,
I'm sure in this industry, in your industry, especially that you're in, that there's a lot of things that you can kind of turn your eye to in order for things to get approved.
There are. Like, my first deal I ever got under contract was, you know, he was doing a 5% down conventional. It was my first deal ever. Like, I'm walking through it with Richard and everybody at Expedient. And he asked me, I forgot how we got into, like, not get into it, but I forgot how we came across the topic. But he said, I asked him, I said, yeah, you know, you get about like 60 days to move into the property after you close this and that. He's like, well, if I'm not moving in 60 days? And I'm like, what do you mean?
Yeah.
And he's like, well, I'm gonna buy this house and like, I'm gonna just move into it like in a few months, you know?
Yeah.
Maybe I think it was like February.
Yeah.
You know, maybe I'm gonna move into the house like in June. You know, I'm still here in Chicago.
Yeah.
And I'm panicking because I'm like, I just ruined this. You know, my
What-
first deal ever, and I'm about to
man.
butcher
So
it.
what kind of loan was he getting?
Conventional, but primary.
Primary. So he has 60 days to move in.
You get 60 days to inhabit the property, and 5% down. And I was saved by the grace of God because he had money, and that I could have swept that under the rug. Like
Right.
I even had some people around me telling me, "Hey, you didn't hear it.
Right.
You didn't hear it." And I'm there thinking like, "No, dude, like I heard it. I'm going to prison. I'm going to go to jail. I'm gonna
It's your license
like
that's on
I mean,
the line.
you know, am I going to go to jail? Probably not. Am I going to get fined? More than likely.
Yeah.
Like, but it's my license on the line. That's how I
Right.
see it. So I was, I mean, yeah, I told him I was like, we have to do 20% down, and he was like, all right, that's fine.
Yeah.
Because he was gonna have like his girlfriend move into it and stuff, but you know, the guidelines also say like that your girlfriend is not like your family.
Yeah.
You know what I mean? Like you're
Right.
not legally married or anything, so it doesn't
Yeah.
necessarily count.
So I would imagine it as a loan officer, you kind of have to navigate those challenging moments quite often, you know?
Yeah. I mean, the way I navigate is just like, hey, these are the guidelines and I'm
Yeah.
not gonna steer from them
Nice.
because I've heard
Nice.
stories people do steer from the guidelines
Yeah.
and it comes back and bites them in the you know.
And again, it's your license on the line.
Yeah,
You're
that's
the
how I pay
professional.
bills.
Yeah.
You know what I mean? This is how I'm living life.
Awesome. So I got another question for you. This is more regarding the mortgage rates. Okay. So how can you justify the volatility and the unpredictability in the mortgage markets for the first-time home buyer?
How do I justify? I think it just comes down to transparency. Talking to clients, letting them know, you know, if they tell you this is where your credit is,
Yeah.
I could quote a rate,
Yeah.
but once we actually pull credit, it could be different. Now, you know, you want to let them know on a day-to-day basis the market can change in the sense of today we could be at 6.25 par rate, tomorrow we could be at 6.5, or you know, maybe we go from 6.25 to like 5.875 at par. So
Wow.
it's one of those like time is of the essence.
Yeah.
But this is not to make you buy right now. This is not
Right.
to make you
Right.
like hurry up and just
pressure
go find
tactics.
something.
Yeah.
This is just to let you know that when you do find the house and we talk and maybe the
We have
rate's
to have-
different.
We have to revisit this conversation.
Yeah, maybe the rate's different. I covered my behind basically. Like, so they can't say like, well, you
Yeah.
told me it was this, and I
Right.
said, well, that's why we have that conversation. It's this today. We find a house today, which it's possible, and execute. We lock you in. We could lock you in on this, right?
Yeah.
But hey, even like within an hour to 2 hours, it could change. You know what I mean? And so I just having that conversation with them, setting the expectation up front, it helps for a smoother transaction.
Wow. Yeah, because I would imagine rates change, quite often.
Oh yeah,
Yeah. And then last year in 2023, you saw the rates kind of go up and up and up and up.
Dude, we were close. I was quoting people with 700 scores, like 7.625, 7.875. Like it was,
Wow.
it was bad. And
So 7% interest
barely at
rates
par.
with like a 700 credit score compared to what we were at like 4 years ago at 3.5%. So
Mm-hmm.
how much of a monthly difference did that make? Couple $100?
couple hundred.
$1,000?
I mean, if you go from like 7.875 to maybe like, let's just say a whole point, 6.875. I mean, you could be looking at $100 to $200 difference
A month.
in monthly payment. Yes.
Wow. Just on the interest rate.
Just on the interest
What about
rate.
the purchasing power?
Purchasing power can change as well. For every like 50 to $100 that now gets taken up from either added debt or the rate increase,
Yeah.
that could decrease your approval amount by 10, 20, $30,000.
Wow.
Basically for every $50 that you could free up, we can do an extra like 10,000 in approval amount.
$50
For every $50 that, like, the rule of thumb is it is like $50
a
and
month
then like,
difference in mortgage.
right. So like if you let's say you have some liability, or
Yeah.
let's say you buy down the rate a little bit. We
Right.
have this conversation, right?
Yeah.
If you buy down a little bit and we're gonna go in at this rate,
Yeah.
we can get you approved up to this amount. But if we're gonna go in at the higher rate,
Right.
it's gonna bring that down a little bit.
Mm.
And so
Right.
really just running numbers, and again, it's like a day-to-day thing.
Right.
Like I can't get a text or a call and say what will my payment
Yeah.
be, and I'm like, oh, it's
This,
XYZ.
yeah.
Like I have,
But
like,
that's
we got to
not-
get into
But
it.
that's
with
what
it.
the consumers expect, right? They expect to talk to a loan officer and, hey, man, I'm gonna apply. Tell me how much I can afford, and I don't want it to change tomorrow.
Yeah. Yeah, I'll tell them too. It's
Yeah.
it's gonna be by your. It's a what's the word I'm looking for? Like case by case.
Case by case, yeah.
It's
Yeah.
like you could tell me you make 110,000, but if you have a lot of debt,
Right.
$5,000 worth of monthly liabilities you're liable
Yeah.
for. Yeah, that's a big big deal.
Yeah.
Like you're not gonna get approved for the house that you might want.
Right. Even though
You
you
know?
make high income.
Right.
So question about that. So someone makes high income, and tells you they make high income, have good credit or okay credit, right? Fair credit. And then they're expecting to buy like a $500,000 home because they're high income. And then you have to be the bad guy who tells them actually based off your debt, D to I, debt to income ratio, you actually can't afford as much as you thought. How do you navigate those conversations?
With grace. With grace. Basically, we'll look at the file, and if they do have a ton of debt and their debt to income is preventing them from where they want to be, before I tell them I can't approve you for that, I'll say, hey, do you get any other income?
Yeah.
If it's a family and maybe they got children, but the wife had a previous child, she's getting child support for him or her.
Right.
Do you get any child support?
So you look
alimony?
for ways to
We look for ways. Do you get any overtime bonuses, stuff like that? And then based off that, we'll collect the necessary documents. But if they don't, it's like, nope, it's just this, straightforward.
Yeah.
Then it's like, hey, your debt to income is a little bit high, so the most I could do for you would be XYZ. But if we go about it this way and hey, pay down some debt, we can get you to this
Yeah.
point. Or buy down the rate, don't pay down debt, we could get you to this point.
Gotcha.
So it's really case by case, just
So 4 things: down payment, credit score, debt compared to your income, and your income. Would you agree those are 4 important things to include in the mortgage application to consider?
I would say credit, work history, assets, and having a down payment.
Nice. So credit, work history. So you got to be working.
Yeah, gotta be working.
Your assets compared to your dets, and then
So assets as in like just money that you might have saved
Yeah,
up,
so fun,
whether
yeah.
it's savings or a stock account that you could withdraw, that you plan on wanting to use to purchase your house.
so all that can, and then also the last thing was what was the last thing you said?
What was the last thing I said? Having a down payment.
Having down payment.
Having down
Okay,
payment.
so in order, what would you say is most important to focus? If you had a buyer, like, hey, focus on this, and then this, and then this. What would be the order? Of
So I'll say
importance?
credit.
Credit's the most important.
Credit's the most important. Saving, save your money. Let's look at assets, and then work history.
Work history.
Yeah.
And then
Or we can even flip work history to be number 2 and savings would be the last. Because, I mean, to qualify for a mortgage, you have to work.
Yeah.
We need a source of 24-month work history.
Yeah.
You can have very little gaps in between. Maybe
Yeah.
you're changing employment.
Mhm.
Anything that's extensive, we'll have to dig deeper into it. But having your credit in check, having your work history in check, and having some money saved up, I mean, it makes you a pretty strong candidate.
Nice.
Everything else, we'll look at it when we get the file,
Yeah.
basically.
I love that answer, Ben, because you said nothing about making $200,000 a year, right? It was nothing about.
You don't have to make a ton of money. I actually had an agent come into the office and they're like, look, what can we do for this person? And I said, well, we're going to need XYZ, right? We already looked at the file and this is what we're going to need to make it work. And then once we get these documents to make it work, the most we can do is probably 110,000. Now, if she can find something for 110,000, I'll do the loan.
Yeah.
It doesn't matter to me. But if they need a higher purchase price, we're going to need a cosigner or, we're going to need to figure something out.
So you have to be creative and to help her with her goals,
Mhm.
right? Nice. Awesome. Got another question for you. This is a little bit different approach. Some critics argue that the mortgage process is intentionally complex to disadvantage first-time home buyers. How do you respond to this?
When you say disadvantaged home buyers, what do you mean?
So by making things so complicated and hard to understand, they may not know what fees and costs are associated with the process, or they may not understand until day of closing and they're kind of forced to
Do it.
do it.
So I would say transparency. You have to be transparent about everything you do. If I'm quoting a rate, I'm going to tell somebody this is at par. I'm not going to quote 5.25 and they think, oh, I'm going to get a 5.25
Yeah.
and I'm charging them $10,000 to do that.
Yeah.
You know what I mean? Like, so it just comes down to like being transparent, especially with first time home buyers. There's a lot of misconceptions out there and there's a lot of, it's like a gray area when it comes to them. They're like, I don't really know.
Yeah.
My mom and dad bought their house off a handshake, right?
20 years ago.
So, just being transparent, letting them know how it works on the broker side of things. We can either charge appraisal up front, when you find a property, or we can charge that at closing. So we let them know that as well.
Okay.
Along with if we have like an underwriting fee, we'll let them know about the underwriting fee. If we have a processing fee.
So you're saying like if the mortgage professionals are transparent in their communication, then that can help avoid the
Oh, most definitely. If you can just have that upfront conversation and let them know like, this is what it's going to be and this is what it's going to take, then there shouldn't be like, these comments or talks about, first time home buyers getting taken advantage of or they're at a disadvantage, right? I mean, last year I helped somebody get into a house. I would say it's probably like one of like the coolest loans I did.
Nice.
I mean, they made money. They just couldn't save money.
Yeah.
You know what I mean?
Oh.
And so like, okay.
It's a problem, everybody.
yeah, we're making money. We're not saving it.
Yeah.
Okay, fine. They didn't even have the 1% for earnest money. Like it was like this, we're going to make it work this way. This is how it's going to have to work or it's not going to work.
Right.
So the agent went out and did what, we recommended. Like this is how we're making it work.
Nice.
And we put them in the house. I mean, they make good money and they pay their stuff on time.
Yeah.
They just can't save money.
Yeah.
Because yeah.
Yeah.
You know what I mean? So we got them the mortgage that they needed, their monthly payment at. I mean, we're never going to say, well, you got to take this monthly payment regardless. So like it is what it is. It's going to be, well, okay, well, hey, let's wait and let's save some money.
Yeah.
But we did a down payment assistance program and they put $250 down in earnest money, got all closing costs, and then they got their $250 back at closing.
Nice.
So that was just, you have that transparent talk though.
Yeah.
Like, hey, down payment assistance.
So there was no It was a no for you. It was okay. How can we do it?
Yeah, it wasn't like, no, can't do it. Like, hey, down payment assistance, there's this bad rap around it, right? Nobody wants to do it, whatever. I get it. It's not for everybody, but it is for some people.
Yeah.
And in this case, they're like, look, I've been in this apartment for 5 years. I'm not renewing.
Yeah.
And I don't want to rent anymore.
Right.
So it's like, all right, fine. This is how we're going to have to do it. And we go through it. We go through the numbers.
Yeah.
Hey, if you didn't do down payment assistance and you saved your money, this is what your payment would be. And then, we do our little math to say like, this is how much, over the course of years, how much it'd be for you to break even.
Right.
And then it's like, hey, well, this is down payment route, assistance route.
Right.
The rate is a little bit higher. You know what I mean? Because you're getting money to help you. So they're putting the rate a little bit higher. Can't refinance or sell the house in 3 years. If you plan on staying here for 4 to 5 years, I would say this is good for you because it's gonna limit the cost, and this is what's gonna help you get into the house.
Nice.
And so they're like, we're game for it. The monthly payment.
So being transparent, being creative to find different solutions. Nice. Well, it sounds like you have a lot of good experiences, but Ben, what's a frustrating experience that you get all the time when it comes to dealing with clients who are interested in buying a home?
I've only had one bad experience.
Tell us about it.
And it's not that, I got yelled at from a client. It's nothing crazy.
Yeah.
I got yelled at from a client because they went to go see a few open houses throughout the weekend. And when they asked me for, what would my rate be based off today on a Friday, I said, you're going to be at like a 7.75. This was early 2023. That's where we were.
Yeah. And
so I guess they did some open house. They went to some open houses. Open houses have lenders that sit in at them. This lender quoted them a 7.25 or like a 6.5, something in the sixes.
Yeah.
And then they called me, and I mean everything was going great. When I would talk to the wife, it was like, oh my gosh, thank you so much for all your help. All these other people were just like, whatever. And then when I talked to the husband, and I'm telling them like, this is how, this is the conversation that we had, because you work, right? So your wife is calling. I'm not going to be like, hey, I'm not going to talk to you without your husband. Like if you have questions, I'll answer them.
Right.
And then like, if your husband has questions, we'll answer them.
Yeah.
And, he was like, yeah, this all sounds great. But I knew this was going to go south when he made this comment, because the wife was talking about pulling from the 401k to buy a house. Yeah. And I said, well, you guys do want to pull from the 401k. And he goes, well, we've talked about it, but I haven't finalized it. So I might have to put her in her place so she understands that like, this is not for sure. Yeah. And I was on the phone. I'm like, okay. Yeah. Like, all right. Yeah. So when he made that comment, I was like, this is going to go south quick. Yeah. And so the weekend passes. On Friday, they asked for the rate. I gave it to them. This is what's going to be at par. The wife calls me, hey, I think we found the house, this and that, whatever. I talked to her. Thank you so much for your help. And I'm like, yeah, of course, just let me know if you have any more questions. Then the husband calls me maybe 30 minutes later. He was like, hey, the rate is like XYZ today. Yeah. And I'm like, yeah. And he goes, well, why did you quote me like a 6.5 or something? And I'm like, I told him, I was like, I never quoted you that. Yeah. I'm being honest. I never quoted you that. Like, I don't know who told you that, and he's like, well, on Saturday, wasn't it that you told us? And I was like, well, no. And see, I knew that they went and talked to other lenders because the wife told me. Yeah. And so I told him, I said, hey, that might have been the other lender that you were talking to, because it wasn't me. Yeah. You know what I mean? Like, I can't offer you 6.5 or 6.25 at par. Like, that's not, no.
Something that's available for us right now.
Like, I mean, you can buy down, but that's not, that's not the case. And then he was like, well, are you having a good day? And I'm like, yeah, like what's going on? He's like, because you're being really rude right now. And I'm like, I said, no, I think you have a misunderstanding. Yeah. I said, because I never, like, I never quoted you that, right? Yeah. This was the hardest part in my career, because, you're expected to let people walk all over you, in a sense, right? Yeah. I'm the client and I'm right. Right. But when you're putting words into my mouth and you're misquoting,
there's kind of a level of,
there's like, hey, like, no, because
some boundaries you got to set.
Yeah, because then you can go back to whoever and say Ben isn't transparent. Right. Ben does shaky business. So when it came down to, well, you told me this, I never said that. Yeah. Don't put words in my mouth. Yeah. And so I made that decision. I said, hey, I wish you the best of luck. You're in hands with a great agent. I don't think we're a good fit for each other.
So you had to almost fire him.
I had to let them go, and it sucked because I mean they closed.
Yeah.
You know, I saw the closing post.
Yeah.
But
Yeah.
it was like, well, do
You
I
have
let
to
this
put your foot down.
do I let this guy yell at me and
Yeah.
belittle me and try to put words in my mouth
Yeah.
and you know be like what's like not sarcastic but like
Condescending,
condescending like,
yeah.
well, are you having
Yeah.
a good day?
Yeah.
You know what I mean? How's your day going?
Yeah.
Like, nah, dude, like there's a limit, you know.
It sounds like the frustrating part was, being disrespected,
Mhm.
and you set some boundaries.
Being disrespected because
Yeah.
I've been disrespected before and like I've
Yeah.
kind of like brushed it off like you know what I mean, like just get through it.
So I
now
got a
it's
final
different.
question for you. You've been in the mortgage industry, what, 3 years?
3 years.
3 years.
3 years.
If you can go back to when you first started, what do you wish you had known then that you know now about the mortgage industry?
Oh, there's so much I could say.
Yeah. What's the one thing that's the most important thing that kind of floats in your mind?
Being consistent, being disciplined,
Mm.
and being like a good manager
Of
You-
yourself.
of like your business.
Mm.
You know, people get into the business and they're like, well, I'm
Nice.
self-employed. I work it how I want to work it.
Nice.
No, at the end of the day, like if you actually want to be somebody and like, you know, make an impact
Yep.
in the industry and like in your community, like you're going to have to work really hard.
So being consistent and like learning to manage your business.
Mm-hmm.
Nice.
Like in the sense of like, you know, it takes 3 to 5 years to launch a real estate career
Yeah.
or a mortgage career. I learned that from Carl. It takes
Yeah.
3 to 5 years to launch because, you know, you're building up the momentum.
Mhm.
A lot of people will have like really good months and then like they think they've like, oh,
Yeah.
but it's like, no, this is just like,
Yeah.
this is like a token for all your hard work.
Yeah.
You have to keep going, you know? So as I'm into the third year, I'm like, okay, I'm kind of seeing the more consistent, like
Yeah.
of what my months are going to look like. But I know I still have a lot of work to do because by year 5, then I should be it should be like auto rotation for me,
Mhm.
you know, every
Nice.
month.
Nice.
So being consistent, being disciplined, managing yourself, and you know, sometimes you just have to like put the pride aside
Mhm.
and like get a coach.
Yeah.
Get a coach, get a mentor, someone that's going to tell you how it is.
Nice.
A lot of people like to have people around them that will like give them little nuggets here and there,
Yeah.
but there's not like much value added in the sense of
Yeah.
how you're going to progress as a person,
Nice.
as an individual. And so you have to find those people that are going to basically like,
You have to invest in yourself.
yeah. I mean, my coach, you know, I'm not going to name drop, but my coach, dude, first sit down we had, I mean, straight busting my bubble.
Yeah.
You know, you look like a kid that just hangs out at a mortgage company, right? You're not professional. All this mindless marketing, riding off on skateboards, making memes, it's useless.
Yeah.
What time do you get up in the morning? Oh, I'm getting up like around 8 or 9. I'm getting to the office by 11, 12.
Yeah.
No, you got to get, you know, like basically,
Yeah, just
he-
putting your
yeah,
foot down.
basically
Yeah.
he bust my bubble, but
Yeah.
I mean, it was a wake up call because I left that day. I left that restaurant that day just like, wow. And the only time I look back is when I look back at that day and I'm like,
Yeah. Nice.
like you have to out,
Yeah.
you
So
have to be better.
You almost wish you had that conversation when you first started.
Yeah, you know,
Yeah.
because like at AE Realty, I mean, I wasn't even a full year into the mortgage
Yeah.
business and Carl made me VP of sales. And I'm
Yeah.
like,
Yeah.
thank you, but
I'm still learning.
I don't, you know, he showed me the numbers and I'm like, dude, like,
Yeah.
let's be real.
Yeah.
You know what I mean? Like I've done some good things, but not like stellar things.
Yeah.
Like
you still want to invest
let's
in
just be
yourself.
real.
Nice.
Yeah. I had a lot to learn still.
Well, it seems like I've been seeing your career, and you've been going at a very consistent kind of trajectory, and I'm
Mhm.
excited to see you grow more and more. I'm excited for 2024, what it brings to you, Ben.
Yeah, I'm excited too. 23 was tough.
And then
You know,
it
but-
was, and then maybe next year we can do this again, and we'll have a whole different conversation.
Yeah. Yeah.
Well, thank you for coming in, Ben. Appreciate it. Till next time, brother.
Hey, when's our next deal?
It'll be today.
Okay.
And let's go find some deals.